what if I told you gold is officially out and Bitcoin is in? Sounds crazy, right? For thousands of years, gold has been the symbol of wealth and power. But what if I told you the tides are shifting and nations are eyeing Bitcoin as the new global standard? Imagine a world where your gold bars are just shiny paperweights while Bitcoin reigns supreme. But here's the real kicker. How would this change your life? From your savings to your shopping habits, nothing would stay the same. In this video, we're diving into the domino effect that ditching gold could create, how governments would adapt, how inflation could skyrocket or plummet, and why some nations are already making their move toward Bitcoin. Could this bold shift be the solution to economic stability? Or are we walking into the financial chaos of the century? The power of gold. Gold isn't just a shiny rock, it's a bedrock of economic stability. During financial crises, its price often skyrockets while other assets crash and burn. It's tangible, limited, and universally trusted, qualities that have made it indispensable for over 5 millennia. But can Bitcoin, the digital newcomer, really replace this golden legacy? Let's break it down. Pros. Bitcoin offers decentralization, operates outside central banks, and has a capped supply of 21 million coins, which could boost its long-term value. Plus, it's super easy to transfer globally. Cons. Bitcoin is notoriously volatile. Gold's stability over the ages provides a sense of security that Bitcoin, with just 15 years under its belt, hasn't yet earned. Also, gold's intrinsic value as a physical asset is hard to beat compared to Bitcoin's perception-driven worth. Bitcoin has potential, but has a long way to go before it can challenge gold's legacy. Bitcoin's potential and risks. Michael Saylor, co-founder of MicroStrategy, thinks the US should sell all its gold, buy Bitcoin, and demonetize the asset held by our enemies. Bold move, right? But here's the catch. Bitcoin isn't gold. It's speculative, prone to hype, and in 2022 alone, it lost 70% of its value in a market crash. So, are we really ready to gamble national reserves on something so shaky? Here's the breakdown. Pros. Bitcoin's growth potential could outpace traditional assets. Its capped supply stands in stark contrast to the inflationary nature of fiat currencies, offering a hedge against economic instability. Cons. Cybersecurity is a major concern. Bitcoin can be hacked, lost, or hit by regulatory crackdowns. Plus, Bitcoin's energy-hungry mining raises environmental eyebrows. While Bitcoin's upside is tempting, the risks make it more of a gamble than a sure thing. Global implications of the shift. If the US were to sell its gold, global markets would go bananas. Flooding the market with gold could crash its price, hurting economies and investors worldwide. Meanwhile, Bitcoin's value would likely soar as nations scramble to grab their share. But what does this mean for Bitcoin's price and the global economy? Here's what could happen. Pros. Bitcoin's price surge would benefit early adopters and position nations with reserves as digital trailblazers. Gold's temporary devaluation could stabilize as other countries buy it at lower prices. Cons. Market chaos is almost guaranteed. A devalued gold market would hurt countries relying on it for economic stability. Plus, the wealth gap could widen as those who already hold Bitcoin gain disproportionately. In short, the shift would bring both opportunities and unprecedented challenges. Trump's crypto agenda. Under Trump's administration, we're seeing bold moves toward crypto, from proposals for a federal Bitcoin reserve to appointing pro-crypto figures. It's clear this administration sees digital assets as the future. But critics worry, are these policies genuinely forward-thinking or just ways for the rich to get richer? Breaking it down. Pros. Supporting crypto could establish the US as a leader in digital finance, diversify reserves, and hedge against fiat instability. Cons. Critics point out potential conflicts of interest with figures like Trump and his pro-crypto appointees. Public trust could erode if these policies are seen as benefiting the elite over the average Joe. The agenda is innovative, but comes with risks of a market manipulation and public skepticism. The shocking math. Here's the jaw dropper. If governments collectively took 20% of Bitcoin off the market, we could see a price increase of over $366,000 per coin, with Bitcoin already trading around $67,000. That's a leap to $400,000 or more. Could this turn Bitcoin into the ultimate reserve asset, or does it just make it too volatile for global stability? So, what do you think? Is Saylor's strategy visionary or reckless? Should the US dip its toes in Bitcoin or stick to its golden roots? One thing's for sure, this conversation is far from over. Now, we want to hear from you. Drop your thoughts in the comments. Would you swap gold for Bitcoin? Don't forget to like this video if you found it eye-opening, and hit that subscribe button so you never miss a deep dive like this. Oh, and share this video with someone who loves a good financial debate. See you in the next one.